In this video, I'm going to explain the Max R metric and how you can use it to improve your trading. Alright, so what is Max R and why is it useful? Max R is a measurement in R, or multiples of risk, of how far price went in your favor if you didn't move your stop loss. And why is this useful? It's useful because you can see how far price is going after you close out your trade, and that can give you some clues as to how to optimize your trading system to capture more profits. So in this example, let's say that you took a trade here on the breakout of this double top-ish type formation, and then let's say that you targeted 2R, so that would be right about here, and your stop loss was above this last swing high. So if you took 2R, that's great. You bagged a nice little profit there. It was pretty quick. But then price went all the way down here and you missed out on all that profit. So there's going to be some FOMO, right? So how do you figure out how often this happens and if it's worth trying to target these bigger profit targets, or if you just should stick with your 2R or your closer profit target? And that's where Max R can help. So just start tracking Max R on a spreadsheet or a journal or whatever you use. And over time, over 50, 100, 200 trades, you'll start to see some patterns emerge. Now, if your Max R is only like 3R, then it's probably not worth trying to extend your 2R to 3R, right? But if your Max R is consistently maybe 5R or even 6, 7R, and you can see that you win maybe 30, 40% of the time with that bigger profit target, then you can start to think about targeting that bigger profit target. Either you can target that bigger profit target and give up a little bit on your win rate, or you can create a second position where you target that bigger profit target, but your first position targets that smaller profit target. Those are a couple of ways that you can do that. So the big question here becomes, what is the Max R price? What's the right Max R price, right? And I think people are going to overthink this a little bit and probably try to create some formulas. How far should price go in order for it to be considered the Max R price? In this example, this first low here could be considered Max R, or this other one could be considered Max R, right? Or price could go even lower than this, and that could be the Max R also. So where do you draw the line? Well, I think you should just keep it simple. Don't overthink it. Don't try to create any formulas. Just ask yourself, okay, at what point would I still be in the market? So for example, here, some people might get stopped out by this, or they might get scared by this big retracement and they might choose to exit there. So if that was the case, then this would be their Max R. If you could stomach that retracement, then something over here would be a more realistic Max R. And also think about time constraints. Would you be willing to hold this trade for that amount of time? Some people might be willing to hold a trade for weeks. Some people might be willing to hold it for days, and others might only be willing to hold it for hours. So what does your time horizon look like, and how does that fit with your trading personality and your trading style? So that's how you use Max R, and that's how you track it. It's a really great way to see if there's any room for optimization in your trading strategy. You don't have to do this forever. You can just do it for a little while. You can see if there's any room for improvement, and you can optimize from there. And if you do find some room for improvement, be sure to backtest the strategy again, just to double check that this optimization is going to work for you. So that's Max R and how it's used. It can be a great way to potentially optimize trading strategies and increase your profits. All right, I hope that helped, and thanks for watching.